ExamPrep.School. Maryland Accident and Health or Sickness Insurance Producer, exam code 20-24. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Dental insurance, disability income and related insurance, federal tax considerations, general insurance, group health insurance basics, individual health policy general provisions, insurance regulation, medical plans, senior adult special needs. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under Maryland insurance law, an insurance producer is best defined as an individual who A. Is authorized by an insurer to issue policies and collect premiums on its behalf. B. Sells, solicits, or negotiates insurance contracts on behalf of an insured or insurer. C. Acts as a principal in establishing insurance rates, dividends, or benefits for policyholders. D. Provides advice about general risk management without any insurer affiliation. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like, longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The correct answer is the individual who sells, solicits, or negotiates insurance contracts, per Maryland Code defining a producer. Reason A is not correct. Producers do not underwrite or issue policies and collect premiums on an insurer's behalf. Reason C is not correct. Producers do not set rates or benefits. Insurers establish those elements. Reason D is not correct. Giving risk management advice alone does not qualify someone as a producer under Maryland law. Question 2. For a non-resident individual to maintain an insurance producer license in Maryland, the individual must A. Reside permanently in Maryland. B. Hold an active producer license in their home state. C. Complete Maryland-required pre-licensing education hours. D. Pass a Maryland-specific licensing examination. The correct answer is B. The correct answer is holding an active home state license, which non-residents must maintain to be licensed in Maryland. Reason A is not correct. Non-resident producers are not required to live in Maryland. Reason C is not correct. Pre-licensing education in Maryland is a resident requirement, not for non-residents. Reason D is not correct. Non-residents are exempt from Maryland's licensing exam if licensed in another jurisdiction. Question 3. Which of the following must be submitted with an initial insurance producer license application in Maryland? A. A current personal financial statement audited by a certified public accountant. B. A set of fingerprints for a criminal background check. C. A 3-year business plan outlining projected sales volumes. D. A list of potential insurer employers the applicant intends to represent. The correct answer is B. The correct answer is fingerprints, which Maryland requires for running criminal background checks on applicants. Reason A is not correct. Financial statements are not required for producer licensing. Reason C is not correct. Business plans are not part of Maryland's licensing application requirements. Reason D is not correct. Listing prospective insurers is not required when applying for a license. Question 4. Under Maryland law, a producer whose license has expired may still renew it by paying a late fee if renewal occurs within how many days after expiration? A. 15 days. B. 30 days. C. 60 days. D. 90 days. The correct answer is B. The correct answer is 30 days, the period during which Maryland allows late renewal with a fee. Reason A is not correct. 15 days is too short. Maryland law provides a longer grace period. Reason C is not correct. 60 days exceeds the statutory window for late renewal. Reason D is not correct. 90 days is beyond the allowable late renewal period. Question 5. After terminating a producer's appointment, how many days does an insurer have to notify the Maryland Insurance Commissioner? A. 30 days. B. 15 days. C. 10 days. D. 45 days. The correct answer is A. The correct answer is 30 days. Maryland requires insurers to report appointment terminations within that period. Reason B is not correct. 15 days is insufficient time under Maryland regulations. Reason C is not correct. 10 days is shorter than the statutory requirement. Reason D is not correct. 45 days exceeds the allowed reporting period. Question 6. Which of the following is a ground for disciplinary action against an insurance producer under Maryland law? A. Failing to disclose a prior misdemeanor traffic conviction. B. Knowingly misrepresenting the terms of an insurance policy. C. Missing the required biennial license renewal deadline. D. Not completing pre-licensing education to the state standard. The correct answer is B. The correct answer is misrepresenting policy terms, which is expressly prohibited and grounds for discipline in Maryland. Reason A is not correct. Misdemeanor traffic convictions are not grounds for disciplinary action. Reason C is not correct. Late renewal triggers fees or expiration, but is not itself a disciplinary ground. Reason D is not correct. Pre-licensing education affects initial eligibility, but is not a disciplinary offense once licensed. Question 7. A Maryland insurance producer had her license revoked after an administrative hearing determined she misappropriated client premiums. Under Maryland regulations, which requirement must she satisfy before obtaining a new producer license that suspension alone would not impose? A. Pay a civil penalty equal to twice the misappropriated amount. B. Submit a written petition for reinstatement to the insurance commissioner. C. Reapply and pass the licensing examination again. D. Complete an additional 12 hours of continuing education in ethics. The correct answer is C. The correct answer is that a revoked license requires the applicant to reapply and successfully pass the licensing examination again, whereas a suspended license can be reinstated without retesting. Reason A is not correct. Paying a civil penalty does not satisfy the requirement to demonstrate competency after revocation. Reason B is not correct. Submitting a petition does not replace the need to requalify through examination. Reason D is not correct. Additional continuing education does not meet the statutory re-examination requirement for revoked licenses. Question 8. A Maryland resident producer legally changed her surname and moved her main business address. According to Maryland producer licensing regulations, which action must she complete to remain in compliance? A. Notify each insurer that appointed her of the changes within 60 days. B. Wait until renewal and update her information then. C. Notify the insurance commissioner in writing with proof of the changes within 30 days. D. Submit a new licensing application and examination results. The correct answer is C. The correct answer is that Maryland law requires a producer to notify the insurance commissioner in writing, along with documentation, within 30 days of any change in legal name or main business address. Reason A is not correct. Notifying insurers alone does not satisfy the statutory requirement to update the commissioner. Reason B is not correct. Waiting until renewal exceeds the 30-day reporting window and violates regulations. Reason D is not correct. A new application and examination are not required for a name or address change. Question 9. Under Maryland law, which action can the Maryland Insurance Administration MIA take when investigating a consumer complaint against an insurer? A. Order insurers to reduce premiums for all policyholders. B. Issue a supervisory subpoena for documents and testimony. C. Unilaterally amend policy contract provisions without insurer consent. D. Impose criminal penalties on corporate officers. The correct answer is B. The MIA has statutory authority to issue supervisory subpoenas to compel insurers to produce records and witness testimony during complaint investigations. It cannot directly adjust rates, change policy language, or levy criminal sanctions. Reason A is not correct. This option is incorrect because the MIA reviews rate filings but does not itself mandate universal premium reductions. Reason C is not correct. This option is incorrect because the MIA cannot directly alter contractual terms without insurer agreement or regulatory process. Reason D is not correct. This option is incorrect because the MIA does not have authority to impose criminal penalties. That power lies with the Attorney General or courts. Question 10. What is the primary purpose of a Maryland market conduct examination of an insurer? A. Determine whether the insurer's investment strategy meets risk-based capital standards. B. Evaluate insurer compliance with Maryland insurance laws and fair treatment of policyholders. C. Measure insurer profitability relative to industry benchmarks. D. Audit insurer premium tax filings for accuracy. The correct answer is B. A market conduct examination focuses on how insurers comply with state insurance statutes and regulations and ensures policyholders and claimants are treated fairly, not on financial auditing or profitability analysis. Reason A is not correct. This option is incorrect because capital standards are reviewed in financial solvency exams, not market conduct investigations. Reason C is not correct. This option is incorrect because profitability metrics are not the focus of market conduct examinations. Reason D is not correct. This option is incorrect because tax filings are handled by the taxing authority, not under market conduct scope. Question 11. Which of the following practices is explicitly recognized as an unfair trade practice under Maryland insurance law? A. Offering policyholders rebates or gifts as inducements. B. Charging uniform premiums for risks of identical exposure. C. Conducting detailed actuarial analyses to set policy rates. D. Disclosing all policy exclusions prominently in advertising. The correct answer is A. Maryland law prohibits rebating, which is offering value beyond policy benefits to entice purchase, charging consistent premiums, performing actuarial studies, and full disclosure of exclusions are permitted practices. Reason B is not correct. This option is incorrect because charging consistent premiums for like risks is required to avoid unfair discrimination. Reason C is not correct. This option is incorrect because conducting actuarial analyses is part of lawful rate-making practices. Reason D is not correct. This option is incorrect because prominently disclosing exclusions is required, not prohibited. Question 12. Under Maryland regulations, which misrepresentation in health insurance advertising is prohibited? A. Claiming a policy has no deductible when a deductible applies. B. Presenting actual claim statistics without listing the time period. C. Using comparative charts that show only administrative expense ratios. D. Failing to include premium ranges for each rating classification. The correct answer is A. Misrepresenting the existence or amount of a deductible is a prohibited advertising practice. Omitting timeframes using partial expense data or premium ranges issues may violate disclosure rules but are not specific misrepresentations of coverage terms. Reason B is not correct. This option is incorrect because while incomplete data disclosure is problematic, it is not defined as misrepresenting coverage terms. Reason C is not correct. This option is incorrect because focusing on administrative costs alone may be misleading, but does not constitute a direct coverage misrepresentation. Reason D is not correct. This option is incorrect because premium range omission may breach disclosure requirements but is not a specific misstatement of policy benefits. Question 13. In Maryland, which scenario would be considered twisting in the replacement of a health insurance policy? A. Recommending replacement to improve coverage and fully disclosing comparative benefits. B. Advising substitution by misstating the performance of the existing policy. C. Suggesting add-on coverage without canceling the client's current policy. D. Providing an accurate side-by-side benefits comparison before policy change. The correct answer is B. Twisting occurs when an agent induces replacement by misrepresenting or making incomplete comparisons of existing policy benefits. Honest recommendations with full disclosure are permissible, and add-on suggestions or accurate comparisons are not twisting. Reason A is not correct. This option is incorrect because truthful and fully disclosed recommendations do not constitute twisting. Reason C is not correct. This option is incorrect because adding coverage without canceling existing policies is neither twisting nor prohibited. Reason D is not correct. This option is incorrect because providing accurate, comprehensive comparisons does not qualify as twisting. Question 14. Which of the following practices is permitted under Maryland's rebating prohibition and nominal promotional items regulations? A. Distributing a company-branded acrylic pen valued at $2 to every applicant, regardless of purchase. B. Offering a $20 gift card to each client who purchases an accident and health policy. C. Waiving the $50 application fee for applicants with pre-existing conditions. D. Reimbursing clients for medical expenses incurred under any policy. The correct answer is A. The branded acrylic pen valued at $2 is a nominal promotional item allowed under Maryland law. Cash equivalents like gift cards, fee waivers, or reimbursements constitute rebates and are prohibited. Reason B is not correct. Gift cards are cash equivalents and thus constitute impermissible rebates under state law. Reason C is not correct. Waiving established fees provides a financial benefit and is considered a rebate, which is prohibited. Reason D is not correct. Reimbursing medical expenses is a direct financial inducement and violates the rebating prohibition. Question 15. Under Maryland law, which duty must the producer fulfill before sharing applicants' non-public personal information with marketing partners? A. Provide an initial privacy notice and allow applicants the opportunity to opt out of sharing. B. Obtain a signed authorization under HIPAA before any disclosure. C. Post a privacy policy on the producer's website and treat that as notice. D. Limit collection to information needed for policy issuance and never share it. The correct answer is A. Maryland requires producers to deliver a privacy notice at the start of the relationship and give consumers the chance to opt out before sharing their non-public personal information. Reason B is not correct. HIPAA authorizations apply to healthcare providers, not the financial privacy notices required of producers. Reason C is not correct. Simply posting a policy online does not satisfy the requirement to deliver notice directly to applicants. Reason D is not correct. While limiting data collection is good practice, it does not fulfill the mandatory notice and opt-out requirement. Question 16. Under Maryland insurance law, which of the following accurately distinguishes an insurer from a nonprofit health service plan in the state? A. Only insurers are authorized to provide prepaid hospital and medical service plans. B. Nonprofit health service plans are required to maintain a higher minimum capital and surplus than stock insurers. C. Premium rates set by nonprofit health service plans are exempt from review by the Maryland Insurance Commissioner. D. Insurers may distribute dividends to shareholders out of surplus. whereas nonprofit health service plans cannot distribute profits to members. The correct answer is D. The correct answer is that a for-profit insurer may distribute dividends to shareholders, whereas a nonprofit health service plan must reinvest all surplus and cannot distribute profits to its members. Reason A is not correct. Nonprofit health service plans are also authorized to provide prepaid hospital and medical service plans under Maryland law. Reason B is not correct. Nonprofit health service plans maintain capital and surplus requirements similar to mutual insurers, not higher than those for stock insurers. Reason C is not correct. All health plan premium rates, including those by nonprofit health service plans, are subject to review by the Maryland Insurance Commissioner. Question 17. Which of the following is a statutory requirement for a health maintenance organization, HMO, operating in Maryland? A. Operate exclusively on a fee-for-service basis without prepaid elements. B. Obtain an exemption from the Maryland Insurance Commissioner if offering point-of-service options. C. Limit enrollment to Medicare beneficiaries unless receiving specific waiver. D. Maintain a written provider network agreement with participating physicians and hospitals and assume full financial risk on capitation contracts. The correct answer is D. The correct answer is that HMOs must contract with their provider network and typically reimburse providers under capitation arrangements, thereby assuming full financial risk for covered services. Reason A is not correct. HMOs operate on a prepaid basis, not exclusively on a fee-for-service basis. Reason B is not correct. There is no special exemption required for point-of-service options. All HMO plan designs follow established regulatory filings. Reason C is not correct. HMOs may enroll various groups, not exclusively Medicare beneficiaries, under a waiver requirement. Question 18. In order to obtain a certificate of authority to transact insurance in Maryland, an insurer must A. Obtain prior approval for all insurance policy forms through the Joint Healthcare Commission. B. Establish a home office in Maryland, staffed exclusively by licensed Maryland residents. C. Demonstrate compliance with Maryland's minimum capital and surplus requirements, and file biannual financial statements. D. Maintain a minimum risk-based capital ratio of 300% before commencing business. The correct answer is C. The correct answer is that an insurer must meet the state's statutory minimum capital and surplus requirements and submit regular financial statements to the Maryland Insurance Commissioner for approval. Reason A is not correct. Policy form approval is handled by the Maryland Insurance Commissioner, not the Joint Healthcare Commission. Reason B is not correct. Maryland does not require an insurer's home office to be staffed exclusively by state residents. Reason D is not correct. While risk-based capital ratios are regulated, there is no flat 300% requirement prior to conducting business. Question 19. Under Maryland regulation, domestic health insurers and nonprofit health service plans are required to file financial statements adhering to A. Internal Revenue Service Form 990 filings in lieu of state financial reports. B. Generally accepted accounting principles exclusively without supplemental schedules. C. American Institute of Certified Public Accountants audit standards only. D. National Association of Insurance Commissioners statutory accounting principles and quarterly statement formats prescribed by the NAIC. The correct answer is D. The correct answer is that both domestic insurers and nonprofit health service plans must follow NAIC's statutory accounting principles and use the standardized quarterly formats specified by the NAIC when filing financial statements. Reason A is not correct. IRS Form 990 is for tax purposes and does not substitute for Maryland state financial filings. Reason B is not correct. Maryland requires statutory accounting principles, not GAAP exclusively, for regulatory financial filings. Reason C is not correct. ICPA audit standards may apply to the audit itself, but do not replace the NAIC prescribed filing formats. Question 20. A Maryland HMO enrollee residing in a rural county complains that the nearest in-network pediatric neurologist is located a 2-hour drive away. Under Maryland network adequacy rules, which action must the HMO take to comply with its provider network requirements? A. Offer telemedicine consultations with a distant pediatric neurologist as the primary access method. B. Allow the enrollee to see an out-of-network pediatric neurologist subject to standard cost sharing. C. Document efforts to contract with a pediatric neurologist within the state's travel time standard and provide an interim no-cost referral to an out-of-network specialist. D. Recommend the enrollee use a general neurologist in-network and coordinate care through the primary care physician. The correct answer is C. The correct answer is that the HMO must both demonstrate active efforts to meet the state's travel time requirement for specialist access and, until a contract is in place, offer the enrollee an out-of-network referral at no additional cost. This ensures compliance with Maryland's managed care network adequacy standards. Reason A is not correct. Telemedicine alone does not satisfy Maryland's in-person travel time requirements for network adequacy. Reason B is not correct. Standard cost sharing for out-of-network care still imposes a financial barrier, which violates the requirement for no-cost referrals when in-network access is inadequate. Reason D is not correct. Referring to a general neurologist does not address the requirement for specialized pediatric neurology care within the specified travel time standard. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.